How to use Fibonacci with ICT, Part 2. In this video, we'll go over how to use more advanced concepts of ICT with the Fibonacci sequence. We'll also show you something that we found at the end of the video that is not in ICT's teachings, but uses his concepts with astounding results. So stick around. After you've drawn out your Fibonacci extension or retracement, which we showed you in the first video, you can use the more advanced ICT concepts to refine your trades. The main ICT entries are the OTE, the optimal trade entry, which is off of the 71% retracement level after a break of structure. Then you have the breaker, which is 50% of a breaker block. Then the order block, which is 50% of an order block. And the fair value gap. And of course, the 50% of the fair value gap. Here's a look at the OTE, the optimal trade entry, and the 71% retracement level after a break of structure. You'll see in the picture, there's a retracement back to the 71% level after a break of structure. This happens during the London session. And to add context to this situation, remember in our previous video, we outlined that you want to look for these types of moves off of Fibonacci levels. So this move happens off of the 2% fib extension. The next entry is the breaker or breaker block. This happens the same day, and you're still at the 2% fib extension. During the New York session, there's liquidity taken, and then a break of structure. And then price returns back to the breaker. And it doesn't go past 50% of the breaker. And that's your entry. Again, here's the context for that move. You have the 2% extension, and the New York session is in red. For order block entries, you want to enter at the 50%. And there's an order block on the down move, and you see the 50% of that order block is respected, and that's your entry. Coincidentally, there's also a fair value gap, and there's another 71% level respected. This too happens during the London session. And to see the Fibonacci extension basis for this trade, price went to the 3% extension, and then it started to retrace with a break of structure during the London session, and then a retracement back into that order block. Our fair value gap entry again happens during the London session, and you see a break of structure and then a return into the fair value gap, and the 50% level is your entry. This is the Fibonacci basis for that fair value gap entry. Price reached the 1.27 level and failed to go above it. Then it broke structure to the downside, and that created a fair value gap, and your entry is at 50% of that fair value gap. In using fair value gap theory, fair value gaps can be measured in quadrants, and market intentions can be inferred from the way price reacts inside of that fair value gap. The best Fibonacci retracement level inside of a fair value gap is going to be the 50% level. This is a fair value gap and the quadrants marked out. As you see, price never reached the 50% level of this fair value gap. It only reached the lower quadrant. Some people may not have entered on this trade because it did not reach the 50% level. But in this image, you'll see that price does reach the 50% of the fair value gap. And that's where you would enter your trade. It is also a higher probability trade that lines up several ICT concepts as an entry trigger. If you can line up a 2.618 Fibonacci level with a breaker block or a 50% of another fair value gap, you will have more of a chance that that trade will succeed. In this example, we see price has reached the 2.618 extension level, then has started to retrace. We can start looking for our entry. And during the New York session, our entry occurs. You see price reached the 2.618 and then closed above the London session, and that created a breaker. But inside of that breaker move, a fair value gap was created. And that is where you will enter at 50% of the fair value gap, which coincidentally is 50% of the breaker. This is what we mean when we say combining ICT concepts. This trade is a high probability trade. And as you can see, price took off to the upside. As promised, here is new information about what we found about fair value gaps in wicks. Normally, ICT just uses the Fibonacci tool to measure 50% of the fair value gaps in the wicks, as well as the quadrants. However, what we found is that when you use the Fibonacci extension anchored to the fair value gaps and the wicks, you can get insanely accurate predictions of price movement. It's as if the negative space is revealing the underlying design of price movement. For the best extensions, you can use the following levels: the 1.618, the 2.382, 2.618, the 3, the 4, and the 4.618. Here is an image of several fair value gaps that were used to create different extensions where you can see price respected those levels. There's a fair value gap, a second one, a third one, and then a wick. Here is more detail on another use of this new strategy. You see the fair value gap is created. Price then moves back above the fair value gap up to a 1.27 fib extension, and then moves down to a 2.618 fib extension, all off of that one fair value gap. Here is another example. The fair value gap is outlined, then an extension is drawn from that fair value gap, and price reaches the 4.618 level, measured from that fair value gap. This measures the wick that was created in the previous session. Price retraced back up to the 3% fib extension from the wick, which coincidentally did not close above the 50% of the previous fair value gap. And here is again where you're combining ICT concepts of fair value gaps, wicks, and 50% levels. This is a brand new way to use Fibonacci with ICT. And as we backtest and forward test it, we will share any other new insights that we come up with. In closing, we hope you enjoyed this video. Please like and subscribe to be updated on future videos on this and other money topics. Thanks for watching.